Everyone, and welcome to Confident Compounding with Corey Kramer. After taking a few days off for the holiday, I'm back at it and fulfilling a request to take a look at Eli Lilly, ticker LLY. So as I said, this one came in by request down in the comments of one of my other videos. If you have a request, put it down in the comments. I will get the ticker up on the chalkboard behind me. Eventually, I will make a video for you. It might take me a little while to get to them, but I'm going to be putting out a lot of videos this month, so chances are I'll get to it. I also have a free tier on Patreon where I do post the requested videos as well. Sometimes I post them there and not on YouTube, so make sure you check out that link in the description. And I have weekly picks on Patreon for $25 a month as well. Okay, so as always, not individual investing advice, just how I analyze stocks. So a little disclaimer for the drug companies now, which is so pharmaceuticals, $1 trillion market cap too. They must have just passed that. I think I just heard them talking on Bloomberg where they were getting close. So congratulations to Eli Lilly. I don't own this one, unfortunately. So the big story here is their weight loss drugs, right? So let's look at, before we get into let's just look at the historical earnings and let's look pre-pandemic, okay? So from 2005 on the fast graph till 2019, not including these dips here that we see, earnings growth was only 5%, okay? So, and when you include these dips, basically they didn't have any earnings growth. Now they earned money, right? But they didn't really have any significant earnings growth if you just kind of averaged out the earnings growth over this time period. So, or not very much, especially if you include inflation, although there wasn't a lot of inflation. So let's say they grew a little bit. They grew earnings a little bit over this time. And this isn't completely uncommon for drug companies. So especially the bigger ones, they'll go through periods where they just kind of have steady earnings. They aren't really earning any money. A lot of times they'll have dividends. These guys don't have much of one, it looks like. Well, let's see what it was to kind of tide people over. Let's try this button. There we go. So, yeah, they just kind of held that dividend steady until recently. So, steady earning business, but the earnings growth comes in phases for drug companies, which can make it really difficult to use like a normal valuation process, like earnings and earnings growth valuation, which is what I'm going to do here. So that's a bit of a disclaimer. You have to always take a step back and say, okay, how long is this, if there's a new drug or new set of drugs, how long are they going to last until they go off patent? How much competition is there going to be? Maybe even how much is the government going to regulate their prices, right? So all those things come into effect, and it makes it very difficult to value these using just an earnings growth based on historical earnings growth. But it's also very difficult to just project into the wind and use this year's earnings growth of 83% and think they can carry that on forever, which at a 50 PE doesn't necessarily assume that. But so with that aside, we still can at least look at some numbers to say, okay, we'll run the numbers. We'll look at what's kind of reasonable. And then after that, we can zoom out and try to put it in like a bigger perspective. And that at least gives like a little bit of a touchstone for an investor. So it's not just all rumors and crossing your fingers, hoping that they can beat everybody with a drug pill. With a weight loss drug pill. So right now they have Zepbound and Mounjaro, I believe is the other one here, and those are on the market now. That's what's selling. I believe they're like injectables. There was news today that they lowered prices on on the intro product, I guess. Like you have to start lower dosage because there are some side effects. And from what I read or heard, you get like a reduced price for a month or two, and then if you like the results and you want to keep going, then you have to pay like the full price, and then the dosage gets upped, and so they're trying to get people in. So we'll see how that goes. But in the bigger picture of things, I'm not a researcher or I am a researcher, but not in medical field. So I don't know what the longer term potential, damages or side effects could be. But so far, it's looking like for obese folks that, especially really obese people who have difficulty losing the weight, that these drugs can really help. Now, my understanding is that, because sometimes when I do these videos and I'm talking about the weight loss drugs, people immediately think of like the old school, like Dexatrim. If you're old enough to remember what that is, it got taken off the market, I think, a while back. They're basically like speed that you could buy, that would speed up your metabolism, and also kind of in the same process, just reduce your a little bit reduce your appetite to some degree. But mostly it was like a metabolism thing. And these seem to be different, and that it's much more reducing the appetite by controlling glucose, either signals or to the body, so you're not as hungry and therefore you don't want to eat as much. And so that the idea is that you're actually ingesting less food, right, or fewer calories, and rather than kind of eating what you want and then just having your metabolism like really going fast, right? So a little bit different is my understanding than the old school, speed basically that people would take. So we with that, the real question here is, the next generation of weight loss drugs are going to be in pill form, and these guys are working on, there's no way I'm going to pronounce that. Okay, so we'll just say that they have an oral drug that's in trials right now that looks promising. And I think that's one of the reasons why the stock is going higher, because people don't usually like to stick needles so much in themselves once a month or once a week. I'm not sure what the time period is on these. And it's just much easier to take capsules. And if you can take those and lose weight and reduce your, all the bad things that go along with it, then that's pretty good. And there is a big market for it for sure. So that's the promise kind of the future. So I'm going to do a time until payback analysis for this. And the way that works is to say, if you were to, go to the bank and get $1 trillion now, or if you just have $1 trillion sitting around and you wanted to go buy Eli Lilly today, how long would it take you to earn $1 trillion in earnings, right? But I'm going to do it on earnings per share. So if you bought $100 worth of, or 1,000, I guess, if you're buying a whole share right now, worth of Lilly stock, how long would it take the business to earn $1,000 in earnings, right? So in order to do that, we need the earnings yield, which is the PE ratio, price over earnings, inverted. So it's the earnings over the price. Pretty simple. And then we need to know what the earnings growth rate is going to be over the longer term. And I limit my earnings growth rate assumptions to 20% per year, especially for $1 trillion company like this, that's not like a internet company. But what I can do to give them a little bit more cushion, like a little bit more optimism, is I can pull forward these first 2 years. So I can pull forward 33% growth and 23% growth, and I can use this $38.76 analyst expected earnings from 2027. This can be good sometimes, especially because this is a stock where analysts are going to know a lot more than me. They're going to know how the trials are going. They're going to know what the competition looks like. It doesn't mean the analysts are going to be right, but they're going to know more than me. And they're a little bit more optimistic than I would be, because I would limit my assumptions right away to 20%. But what I'm going to do is pull this forward and then use 20% as my earnings growth rate assumption. Okay. So let's go look at, so the way to think about this is, if you paid $100 for Lilly stock right now, how long would it take that $100 to make $100 in earnings? Okay. So right now the stock's trading at $1,057 a share. I have a 20% earnings growth rate. I'm using 2 years forward earnings per share, and that gives me an earnings yield of 3.66%. So the way to think about this is if you paid $100 for the business, they would earn $3.66 the first year, which would grow 20% each year. Now I pull the first year's growth forward. So we can go and I'll show you what it looks like. So I assume the first year, which is actually 2 years in the future, I'll get to that and I'll make that adjustment later. You would earn $4.40 on your $100 investment. If it grows 20% the next year, you earn $5.28, and then you earn $6.33. And you want to know how long it takes for that to add up to the $100 that you invested in the company. In this case, it would take about 10 years. However, we also have the 2 years forward, so it would actually be 12 years. So the question is how long, the initial question is how long are you willing to wait to earn your money back? Usually I like it to be just under 10 years. So right at the 9-10 year cutoff. If we assume 20% growth, that actually happens at $770 per share. If we think they can hit the analyst estimates the next 2 years, and then the next 8 years after that, they can grow earnings 20%. Then in order to do that, in order to earn your money back within that 9-10 year time frame, you need to pay no more than $770 per share, okay? Which is maybe like 30% lower than where it is right now. That would probably be the most I would be willing to think about paying for it. In reality, when we think about the challenges that they would face, let's go back to the fast graph here. So first, they have to hit those estimates. Then they have to grow their $1 trillion business. Well, it wouldn't be $1 trillion if you paid 30% less. So we'll call it a $700 billion business. They would need to grow that at 20% a year after that for another 8 years, which is not impossible to do, but it's probably not easy to do. Well, it won't be. I know it won't be easy to do. They already have a lot of competition on the market. I think if they try to take too much share, then you could have government regulations come in and try to keep the prices down. They do have the fact that they're US based, at least that's my understanding. I can double check that. But I owned Novo for a little while, and they've had all kinds of problems. And one of the more minor problems is the US government is kind of favoring Lilly. Yeah, Indianapolis, Indiana is where they're based out of. So since the US is sort of getting more nationalist lately and kind of promoting home businesses more, that could give them an advantage, especially initially over the next like 2 or 3 years. And so that is one thing that could work in their favor. And then the other thing is we have like the fattest people basically around, and the people that can afford to pay like quite a bit of money in order to lose that weight. So the market's probably biggest here and has the most money, and it would save people money in other areas of their life, like health, and not only that, but eating too much junk food. So I think the potential's actually there, especially if they get their pill out, where they could potentially be worth that $770 a share. If you want to get a little bit more, and I think that was for a 10-year time until payback. If you want to go lower than that to the 9-year threshold, it's one step lower at about $600 a share. So I think somewhere in there, if you liked the company, is kind of where you want to start building a position potentially. 600 might be a little too low because it bottomed at 610 in 2024 and then 623 in 2025. So if they have another kind of scare like that, like 650-ish, 625. I'm guessing there's going to be a little bit of support there. And because, yeah, so that, and the 610 was on the way up probably from 2024. So yeah, that kind of 625 mark, if you're really trying to bottom ticket but believe in the growth stories, that something scary would probably come out against them, kind of what happened back in August or something. So some news headline, yeah, that was only a couple months ago. Some bad news headline comes out, it looks bad, the stock sells off, people panic, short sellers, and you want to come in at like 625, that's probably or 630, that's probably the best kind of situation where the bullish case still easily plays out, but you get an opportunity. But I don't think I would pay more than like the 770, and maybe I think my buy price right now is like 720 or something like that. But I probably also want positive momentum too, so that means it probably needs to dip below that and then rise back. But hopefully that gives just a range. Like I said, these drug companies are really hard to try to buy because the earnings are very hard to project. And when you're paying a high valuation, so back here in August, you would have paid like a 32 PE. That's reasonable if they can grow 20% a year for the next decade. But it's hard to pay too much more than that PE for it. So like under 30, like 33 and under PE is probably reasonable to take a small position, and maybe it will be a big hit and they'll be able to keep developing it over time and improving it, and their competition won't be able to. That's the ultimate kind of bull scenario. But you can see that the market does give opportunities. So it gave an opportunity in August, or so it appears. It's already up 72% in the next couple months. So if you put on your list, you might be able to pick up a little bit. I don't have like a ton of confidence in any of these pharma stocks, but I do occasionally nibble on them. They can be kind of good diversifiers sometimes, and sometimes you can get one right. If you would have maybe bought this dip back here, you would have gotten like a triple by now. And the earnings are supporting it, right? It's not just pure speculation. You can see their earnings are growing. It's really just a question of how long they can keep growing at 20% or more rate. That's what you really have to zoom out and ask yourself. And I don't have the answer to that question, but it seems like they're kind of ahead right now. All right. If you found this useful, hit the like and subscribe button. If you have a request, put it down in the comments, and I'll see everybody later.